Good day, ladies and gentlemen, once again. Please don't forget to subscribe to my channel and inform also others to subscribe. Now we are under 3.14 of the 2021 question bank. SENO MAPHODI PTY LTD is the company name. I like this question because it is not divisionalized, not because when the company is divisionalized, I don't like it. But this one is very plain, and the minute the company scenario is not divisionalized, meaning there is no first division on second division, meaning transfer price is not in place there. And when the question is not divisionalized, there are advantages and there are disadvantages in terms of complexity. Because you have to read everything. There's no information for this division where you can be asked a question on that information for that division, then after another information for another division separately. In this one, you need to read almost everything, almost until the end. Then after you come and answer the questions, although the questions will still be mostly in the order of the information, but some of the information at the end might be needed in the first questions. Now, let me begin going to the requirements first. I won't be reading them in details, I'll just be brief in my reading. We are required first to comment on whether the available prepared water will have to be sufficient for SM being the company. So there is a possibility that we don't have enough water. So water is limited or is a limiting factor. But we are not required to go through the whole process of the limiting factor, contribution per limiting factor, then the ranking. No, they just want us to check if is the available water enough based on what is required. Then the second one, we are then required now to calculate the budgeted optimum manufacturing mix per product type for the body product variation. So in this case, they gave us the water that is required, and they tell us the water that is available, which we would have done that above, but they decide to give us a different scenario. We have the water that is required and the one that is available. Then we can see that what is required is more than what is available, so there is a shortfall. Then in that shortfall, now we need to calculate our optimum manufacturing mix. Take note, they don't say contribution. I mentioned that very regularly. When they said contribution, then you need to take your optimum manufacturing mix multiplied by the contribution per unit. But that is not the case. Number C, we are provided already with the contributions for the 3 product variations. And after we are provided with these contributions, we are required to calculate the budgeted contribution. There is the word again. The budgeted contribution value at the break-even point, meaning we must calculate our break-even point. Then after it will be per batch, then we do it per unit. Then after we need to multiply that contribution per unit by the contribution so that we get to the contribution at the break-even point. Then after, remember, when they say calculate the break-even point, calculate break-even point, you just stop with the number of units. But if they say contribution, you must multiply your break-even point for each product by the contribution. Then after, we are required to calculate our sales mix variance only for one product jumbo, but we can do for all 3 of them, because we can say that we have 3 product variation, but they require us to do only for one. Then after, we are to assume that the proposal to implement the EOQ is accepted. Then we are required to calculate the number of fabric sacks per order, which MSM will need and use to package the supply of SM budgeted. So in this case, we are to calculate the economic order quantity, that is the EOQ that you know from MAC3761 or Cost and Management Accounting 1. So I will stop here. I will not go to the proposal. It will take me to more than 2 hours. This is a question still related to the same scenario. but now we are looking at a different special order in this case, and the special order is out of the whole of 15 marks. I will do this one separately as a short question, just to avoid the 2-hour recording. Then after, let us go. That means in our analysis, we need to stop where they talk about the proposal for the implementation of the economic order quantity. And because this is the last question, then I will write this information lastly. It will be the last one to read. Then now let us begin with our analysis of this question. SENO MAPHODI PTY LTD is a family-owned soft drink manufacturing company operated in a fiercely competitive market. Its market share is only 2%, primarily because it only offers 2 soft drink product type, which is an orange flavor soft drink called Fizzy Orange, and the traditional cola soft drink, which is called Fizzy Cola. Consistent with its competitors, SM offers soft drinks in 3 packaging variations: 330 milliliter, which is a can, 450 milliliter plastic bottle, and 1.25 liters glass bottle. So they have these 3 product variations for each of the 2 product types. Remember, they have 2 types of product, which is the Fizzy Orange, and the second one is the Fizzy Cola. And the Fizzy Orange has 3 products variation under it. That means they do have a Fizzy Orange, which is 330 milliliter. They do have Fizzy Orange, which is 450 plastic bottle. They do have Fizzy Orange, which is 1.25 glass bottle. Similarly, with the Fizzy Cola, the cola has a can, the cola has a plastic bottle of 450 milliliter, and the cola has 1.25 liter glass bottle. So now we have 2 product types, and each product type has 3 product variation: a can, a body, and 1.25 glass bottle of a liter. Then after, I further say that SM values all of its inventories using the first in first out method, and SM uses the variable costing system for internal reporting purposes. The company's expected rate of return and the cost of capital is 10.5% and 9% per annum respectively for both the 2019 and the 2020 financial year. Now, the minute you are provided with the target return on investment is because we are required to do the EOQ. If we remember that the formula of your EOQ says square root of 2 times annual demand term by ordering cost divided by holding cost plus the price, open brackets, term by the interest. This interest is the expected return on investment. This return on investment will not be used to evaluate the performance of the manager, but it will be used when we deal with the topic of the EOQ. The soft drink manufacturing process and capacity. SM soft drinks manufacturing process is closely guarded as secret. However, at a generic level, the manufacturing process involves adding sugar, sodium, and colorant. So now these are the ingredients that are needed or that they add as their primary ingredients to manufacture or to add in the already prepared water. Meaning they do have prepared water, and from that prepared water they add sugar, they add sodium, and they add colorant. So now these are their primary ingredients to blend the drinks that they are selling. The resulting mixture, and whenever there's a mixture, you can get to what you call mix variance. I think I did that question partly in the Ratati company. Ratati, I think there was a mix variance, and also other questions that I dealt with the mix variance. The resulting mixture or blend is then heated and subsequently cooled to form a soft drink. Due to their dissolving effect, the three primary ingredients do not increase or decrease the volume of the prepared water that is put into the manufacturing process. I like what they're emphasizing. That means if we buy 10 liters of water, we put sugar, we put sodium, and we put colorant, that 10 liter remains 10 liter. It does not increase or does not decrease because of the dissolving of these three ingredients. The same prepared water is used for both soft drinks product type. That means we buy only one type of water that is used for the three product variation under each of the product types, which are the fizzy orange and the fizzy cola. All of them, they use the same type of water. Very lovely also to hear that. SM manufacturing capacity is based on the availability of the prepared water, and SM buys, or let me repeat that, SM manufacturing capacity is based on the availability of the prepared water. Obviously, they cannot manufacture more than the available water. SM buys the prepared water exclusively from Hobby Body PTY LTD at R1 per liter. So now we do have the cost or the direct material, if I may say so. The direct material is equal to R1 per liter. And remember, the R1 per liter is not per unit because we produce three product variation. When I'm saying three product variation, that means it will be 330 milliliter, 450 milliliter, and 1.25 liter. So now if we need to know the prepared water cost per unit, let us go there. If we need the prepared water cost per unit, prepared water cost per unit, prepared water cost per unit, we'll have to say for a can, we have a can, and the can is 330 milliliter. It will be R1 times by 330 milliliter. The price that we'll get will be in milliliters. Then we divide this by 1000. It will give us the cost per unit. It will give us the cost per unit. We say 1 time by 330 divided by 1000. Remember, there are 1000 milliliters in 1 liter. That means it will be 0.33. Then we have another product variation which is called body. Another product variation which is called body. We buy the same water at R1 times by 450 milliliter divided by 1000. That will give us 0.45 cents per unit. Then another one is called jumbo. Remember, jumbo is already in liters, R1, so we times this by 1.25. So that is already in liters. And remember, the R1 is R1 per liter. That is why now we are converting that 330 by dividing it by 1000 so that it is equivalent to liters. 330 is milliliters and the R1 is per liter. So when you say 330 divided by 1000, we are converting this to become 0.33 liters. So now when this is in liters, we can multiply it by R1 per liter. But when you come to the last product is 1.25 liters. So it is already in liters. There is no need for us to be dividing. So now that will be R1.25 per unit. Then 1 times 1.25 will give us 1.25. So these are the prepared water cost per unit. So now let us continue further on that reading. Maybe that information will be needed in the future. Maybe it will not be needed. Then after we continue on that same note, and again the R1 is per liter. So now when we multiply by our product variation, we needed to say this product variation must be equivalent to liters. Hence we divide by 1000 again. And this 450 must be equivalent per liter, but still the same product. But for the last one, we don't divide because it is already 1.25 liters. This one is milliliter, this one is milliliter. so hence we divided by 1000. Then after we continue further with that reading, it says a maximum of 2.4 million liters of a prepared water is made available to SM by Hubby during each financial year. So now the maximum capacity is 2.4 million. Maximum capacity is 2.4 million. Then this is the maximum capacity per annum is equal to 2,400,000 liters of water. Maybe there might be a loss that takes place along the way, we don't know. And it says 5% of the prepared water put into the process is lost due to the normal loss. So now this is maximum capacity before loss. Then we need to know the maximum capacity after the loss. Maximum capacity after the loss. Maybe that will be needed, maybe it will not be needed. 2.4 million times by 0.95%. Remember, 5% becomes a loss. So we have 2,400,000 times by 0.95. Then this gives us 2,280,000 liters of water that they need after the loss has taken place. Then we continue reading further. We are now told that each liter of a prepared water that is not lost yield 1 liter of the soft drink. They normally say this sentence even if it's kgs, to say 1 kg of the raw material after the loss will yield 1 kg of the output. Then that is always the case. Finished goods budget for the year ending 31st of May 2019. So the accounting period ends in May each and every year. And we are looking at the 2019 financial year. We have the two product types. Our product types, it is fizzy orange in units and fizzy cola in units. And we have our product variations, which are the can, the body, and the jumbo. And also the can, the body, and the jumbo, because our two product types, they have the same product variation or packaging variation, a can, a body, and a jumbo, which is 330 milliliter, 450 milliliter, and 1.5 liter of a glass bottle. We have opening inventory production, which is manufacturing, closing inventory, then after we have the sale. So in terms of the units, we have nothing to worry. All the units are provided. There's no need for us to be calculating. Now, I want to bring to your attention for further clarity that the 450,000 units are the number of units that have been produced, meaning it is the number of 330 milliliter bottles in this case, meaning it's 330 plus another 330 milliliter, another 330. Then we calculated and said 1, 2, 3, 4, 5. So these are not in liters, but it is just the counting of these units individually. It is the number of the units that were produced, not in liters, not in milliliters, but we know that each unit is equal to 330 and each unit is equal to 450, another one 1.25. Then total of them became 450, 320, and 25,000, 3.450, 2.1, and 12,200 units that were manufactured. Now we definitely will need to some point in time to convert these units into the equivalent liters or the equivalent liters or milliliters where we are required further. Manufacturing and the selling of units are expected to occur evenly throughout the financial year. That means if we can be required to do or to calculate income statement for 1 month, then we just take this annual manufacturing, we divide it by 12. And also the sales, we can take the sales, we divide that one by 12 because the production and the sales happens equally throughout the year. We don't sell more units in 1 month and sell less in another month, or produce more units in 1 month and produce less in the other month. That means our production is constant equally throughout all the months. Together with our sales, they are constant and equally throughout the months, and that will be called fixed. Then we have the in-house variable manufacturing cost. In-house variable manufacturing cost. Due to the different packaging variation, SM resolved to set the standard manufacturing cost based on the requirements of 1 liter soft drink. So they gave us information for per 1 liter of a soft drink, not per 330 milliliter, not per 450 milliliter, not per 1.25 milliliter, but they gave us information per liter. So now we do have the in-house variable manufacturing cost, and they also gave us the abbreviation for this, which is IVMC, in-house manufacturing cost. And this costs are variable, in-house variable manufacturing cost. We have the standard cost per liter of some items of the in-house variable manufacturing cost that are provided to us as follows. We have the sugar, sodium, colorant. These are the primary ingredients that are mixed. Remember, this information is per liter. We need it per unit. We need it per unit. We don't produce 1 liter. We produce 330 milliliter, and we produce 450 milliliter, and we produce 1.25 liter of a glass bottle. Our direct labor is 1.20, 1.20, and our variable manufacturing overhead. Remember, all the costs that are provided to us, they are per liter, not per unit. And we are not given information per product variation. We are given information per product type, not per product variation. Now, I just want to bring your attention to two of the primary ingredients for further analysis. Now, we have, in this case, R1.44 per liter. Then we need to say how much sugar do we need per 1 liter. Remember, the sugar is bought at 12 rand per kg, and then after it is R1.44 per liter. Then we need to know how many kgs of sugar do we need for 1 liter. How many kgs of sugar do we need for 1 liter? How do we do that? We say R1.44 divided by 12 rand. By doing that, we'll realize that for fizzy orange, take note, this is for fizzy orange. For fizzy orange, we need 0.12 kgs of sugar for 1 liter, meaning every 1 liter we put 0.12 kgs of sugar. For the second one, which is the fizzy cola, it will be R2.40 divided by 12. That will give us 0.2, meaning we need 0.12 kgs of sugar in order to complete 1 liter, or to be mixed in 1 liter. Then that will fit our blend. Together with sodium, it will be 0.60 divided by 8. That will give us the required sodium per liter, and 0.8 divided by 8 rand. That will give us the required kgs of sodium to be put in 1 liter. Now let us take this one a little bit further. Then we put our required sugar per unit, required sugar per unit. Our required sugar per unit, it will be for fizzy cola, or fizzy orange first. We start with fizzy orange. Then after we have fizzy cola. We have fizzy cola. Fizzy orange, we have seen that we got 0.12 kgs of sugar, which was R1.44 divided by 12 rand per kg. Then for fizzy cola, we got 0.20 kgs. That means we need 0.2 kgs of sugar for a liter of water, or liter of a drink. Then this was R2.40 divided by 12 rand. Then now we can do the same thing, calculate the sodium requirement per unit. Not per unit, that is per liter. Sodium requirement per liter. Sorry for that. I have to make sure that we're dealing with liters here, not units. Our units has 330 milliliter, 450, and 1.25. Then we do the same thing. We look for the sodium requirement per liter. Sodium requirement per liter. how much sodium do we need per liter for each of the product types, which is fizzy orange. Then after we have fizzy cola, how much sodium do we need? That will be 1 rand, that is not 144, it's a different cost. We have 0.64 and 0.80, divide by 8 all of them. We have 0.64 and 0.80, 0.64 divided by 8 rand. And we have here 0.80 divided by 8 rand. And for both of them, 0.64 divided by 8 rand. That means we need these required kgs, not rands. We need 0.08 kgs of sodium for a 1 liter of a fizzy orange, and we need 0.80 divided by 8 rand. Then we need 0.10 kgs of sodium to complete 1 liter. That is kgs per liter, kgs per liter. And these are the kgs that are also per liter, and these kgs are also per liter. So now that we are clear with that information, we can then now go further, do our further analysis. Then we have our cost, our in-house variable manufacturing cost, which are per liter. Now I need my in-house variable manufacturing cost per unit. I need my in-house variable manufacturing overhead per unit. In-house, the I is small, in-house variable manufacturing overhead, in-house variable manufacturing overhead cost per unit. I already have them per liter, but I need them per unit. So now this will be for each of the product variation, fizzy orange and fizzy cola. Fizzy orange and fizzy cola. Now how will I do this? I need to calculate the total cost. I need to calculate my total cost, and I will have to multiply for each of the products. Okay, that will cost me, I will need for all the 3 products. I will need it for all the 3 products. For fizzy orange, we have the can, we have the body, and we have the jumbo. I need for all of them. Then for fizzy cola, we have the can, the body, and the jumbo. So now we need to calculate the total cost per liter, the total cost per liter for all of them. Then after we allocate according to the product variation. Now let me just get my total of all this in-house variable manufacturing overhead cost. 1 rand 44 cents plus 0.64 cents plus 0.80 cents plus 1 rand 20 cents plus 2 rand. Then we have 6 rand 8 cents. 6 rand 8 cents. Just verify that 2 plus 1.20 plus 0.80 plus 0.64 plus 1 rand 44 cents, that is 6 rand 8 cents. So now the 6 rand 8 cents is the in-house variable cost per liter. 6 rand 8 cents per liter. I want it per unit of a can, per unit of a body, and per unit of jumbo. Then let me calculate the other total in-house variable manufacturing overheads. 2 rand 40 cents plus 0.80 cents plus 0.60 plus 1 rand 20 cents equals plus 2 rand. that is 7 rand. Let me just verify, put equal there. 2 plus 1 rand 20 plus 0.60 plus 0.80 plus 2 rand 40 cents. Then if this gives me 7 rand for the second term, then 7 rand must be the correct total in-house variable cost. Then now I need to multiply here. Remember, this is 6 rand 8 cents per liter. And we know that our product variation, it is 330 milliliters. It is 450 milliliters, and it is 1.25 liter glass bottle. Do you see that our cost is per liter, and this product is 330 milliliters, meaning we need to make sure that we convert the 330 to be in liters by dividing by 1000 before we multiply, so that we know that our calculations are in the same number of units. That is the can. Now, hence now in our calculation of calculating the cost, it will be 6 rand 8 cents times by 330 divided by 1000. 330 divided by 1000. Then this will give us 2 rand 1 cent. Second one, 6.08 times by 450 divided by 1000. Then this gives us a total of 2 rand 73.6 cents. Let us leave it in 3 decimal. The last one, 6.08 times by 1.25. Remember, we don't divide because 1.25 is already in liters, and the 6 rand 8 cents is per liter, and the 1.25 is in liters, not in milliliters. This is 7 rand 60 cents. Then we come to the second product type and do allocation to the product variation. One time by 0.330. This will give us 2 rand 31 cents. Second one, 7 times 0.450. This gives us 3 rand 15 cents. I hope you understand why I'm just saying 0.450, because 450 divided by 1000, it gives us 0.45, and 330 divided by 1000, it gives us 0.33. So hence I just round off to the second calculation of the fizzy orange. Then the last one is 7 times 1.25. Then this gives us 8 rand 75 cents. So now, in other words, we have the cost of a prepared water for body, for can, and for jumbo. Meaning that is the first water ingredients, direct material, plus primary ingredients. We do have the primary ingredients for each of these products. Then after now, we'll look if is there any other cost. And we know that this is a variable cost. This cost varies with the number of units we produce. The more units we need, then obviously the more water will be required. Then after we continue to the next information that is provided to us. I was just analyzing and unpacking the information which is provided to us per liter, standard information per liter, which was not per unit. Now I had to convert it to per unit for each of the product types and our product variation. Then we move further analyzing 2.2, which is standard selling price. I should have done numbering there. This is under 2.1. This is under 2.1. We can be specific and say 2.1 starting from year 2.1, where we did the requirement of the sugar per liter and requirement of the sodium per liter for each of the two product types. Then now, still busy with the analysis under 2.2, the selling prices. The SM standard selling prices for the 2019 financial year for both the product types are as follows. It doesn't matter either it's an orange or it's a cola. The price is the same. That means obviously the ingredients are almost the same cost. Then we have the 6 rand 80 cents selling price of a can. That means a can of a fizzy orange is 6 rand 80 and a can of the fizzy cola is 6 rand 80.
and a body of a fizzy collar is 870, and also for the fizzy orange fizzy collar and 14.75 rand for the jumbo. Both of the product types, as they have mentioned to us, that both of the product types will sell at the same price. But it's not always the case that two product types will have the same price, because the product variation is the same in terms of kgs or meters or milliliters. So now happy that we do have the selling price. Then it says other manufacturing and distribution cost not included in the in-house variable manufacturing overheads cost above are provided to us below. Other manufacturing costs related to the purchase of the custom-made empty container. Oh, remember, our drinks, they need a container. Now we need a container which is bought from an external supplier. The standard cost of these empty containers for both product types are as follows. For 330 milliliter, remember it is for both product types. So the container cost is the same for a can of a fizzy orange and for a can of a fizzy cola. It is 55 cents for 330 milliliter and 80 cents for the body bottle. And for the 1.25 it is 2 rand. So now we have our empty bottle. We have our empty bottle. Our empty bottle cost. Our empty bottle cost. That is under 2.3. Empty bottle cost. Here we have 55 cents. Here we have 80 cents, and here we have 2 rand. Just verify the 2 rand. Yes, we have 2 rand. For both of the product types, we have the same. Then it further says that the distribution, it says SM has outsourced its entire distribution function to Skillpad V4 PTY LTD. The distribution agreement provides for the budgeted fixed distribution cost of 50,000 rands per month and budgeted variable distribution cost of 1 rand per can, 15 cents per body, and 35 cents per jumbo. Let me take the variable cost, then after deal with the fixed cost later on, because we have the break-even point requirement. Now we have our distribution cost. Remember, this is a variable cost, but it's a non-production cost. Distribution cost, that is a variable cost. The distribution cost, they told us that we have 10 cents, 15 cents, and 35 cents. 10, 15, 35. That will be 0.10. That will be 15 cents. That will be 35 cents. 0.35 cents. That will be 10, 15, and 35 cents. Then after we are provided with a fixed cost, our fixed cost is 50,000 per month, and they say 60% of the fixed distribution cost specifically relate to the fizzy orange, while 40% to the fizzy cola. Now let us calculate our fixed cost. Let us calculate our fixed cost. Our fixed cost are allocated per product type fizzy orange. Then after we have fizzy cola, and we have 50,000, that is per month, times by 12 times by 60%. Then we have the 50,000 per month of the distribution cost times by 12 times by 40%. Then let us do the allocation of the fixed cost, which is distribution cost. This is the distribution cost, 50,000 times by 12 equals 600,000 times by 0.6. Then we get 360,000 rands minus 600,000. That means the 240,000 rands is the fixed distribution cost allocated to the fizzy cola product type. then we have dealt with that and done and dusted with it. The other fixed cost, it says all of SM administrative functions are carried out from 850 square meter leased building. We don't own, we are leasing. This building is leased at fixed rate of 100 rand per meter square. How many meter square per month? How many meter square are we leasing? 850 meter square building. So each of these meter square, we are paying 100 rand for each meter square on a monthly basis per month, and this is per month. So now that means we need to multiply this also by 12. During each financial year, this rental is allocated equally between Fizzy Orange and Fizzy Cola. It is, however, not practical to allocate the rental expense among the packaging variation. So it is very difficult, not practical for them to say part of this fixed cost go to Fizzy Orange, another one to Fizzy Cola. So now they're just telling us to add that fixed cost, which is the rental fixed cost. Rent, in this case, it is a fixed cost. We are paying 100 rand. Okay, rental. Let me just be clear also with this rental. Okay, let us calculate in total. Rental fixed cost equals 100 rand times by 850. We multiply this by 12, then it will give us the total fixed cost. 100 rand times by 850 meters square times by 12. 100 rand times by 850 on a monthly basis times by 12. This gives us 1,020,000 rands. If we divide this by 2, it will give us, we divide this by 2, that will give us 510,000 rands. And the 510,000 rands is for Fizzy Orange, because they said it is allocated equally. Another one will be Fizzy Cola, then that will be 510,000 rands. So this will be added to the other fixed cost for Fizzy Orange, added to the other fixed cost for the Fizzy Cola. Because the further they are dividing it to each product type, that means we will be calculating break-even point, or likely to calculate break-even point for one of the product types, not for both of them. Then let us see further if are they still having other fixed cost and are they being split in the same way. It says Fizzy Cola, take note now, they start with Fizzy Cola, not Fizzy Orange. Fizzy Cola and Fizzy Orange specific budgeted fixed manufacturing overheads are 2.5 million and 1.7 million respectively, and they still give us this fixed cost, which is fixed manufacturing overheads, which is our fixed manufacturing overheads. For the Fizzy Orange, we have Fizzy Orange, we have 1,700,000. For the Fizzy Cola, we have 2,500,000. We have 2,500,000. Yes, Cola is 2.5 million. 2.5 million, 2,500,000 rands. So that is our fixed cost divided into 3: rental of the administration building, fixed overheads, and the distribution. And the distribution, I should have put it in a bit more table so that my heading become the product types. Then I list distribution, I list fixed rental, then I list fixed manufacturing overheads, then I list them under each product variation. That would have been easier. Now let me calculate my total fixed cost for each of the product variation. then we have fizzy orange, then after we have the fizzy cola, so that we get the total for each of them. 510,000 plus, I am dealing now with the fizzy orange, 510,000 plus 1,700,000 plus 360,000, that is 2,570,000. We have 2.5 million plus the second one, which is 240,000 plus 510,000, that is 3,250,000 rands of our fixed cost for the physical. So we have dealt with that analysis and we are done. We have other inventory types. We have other types of inventory. We have extract of the actual results. Now we have our actual results. It says, except for the finished goods, SM does not hold any types of inventory. Except for the finished goods, the company does not hold any types of inventory. Then we have the sales. This is only the actual sales. They did not give us actual production. Then we have our budgeted information for the 2020, which is the next year now. Budget for the next year, already planning for next year. We are planning to produce this number of units for the two product types and their product packaging variation or product variation or packaging variation, which is a can body. So that is the plan for next year. Then now we are then provided with the information on the proposal to implement the economic order quantity. I will read this information lastly. And very important in this proposal is the fact that this is for the 2020 financial year, meaning it will be based on the data of the budget of the year 2020 financial year, not on the previous data of the actual and budget of 2019. Now let us read the information that is provided to us. It says, comment on whether or not the available prepared water, remember the available prepared water, it is 2,400,000 liters of water, would have been sufficient for the SM to fully meet its 2019 financial year manufacturing budget for all of the units for both the product types. Now the 2.4 million is planned to be used in the production of the two product types. Now we need to check if is this water sufficient for the production that we want to do. Remember, these are the number of units that we want to produce for all these products, and these are the number of units that we want to produce for the second product type. Now the question, are we going to get enough if the water is only limited to 2.4 million liters as it is given to us above? Now we need to calculate the required water. We need to calculate the required water. Required liters of water for each of the two product types and their product variation. Now the required water will be for each of the three products that we have. Remember, we have first two product types, which is the fizzy orange. We have the fizzy orange. Then after we have the fizzy cola. And each of these, they have a can, they have 450 milliliter, and they have a jumbo. For each of them, they have three product or packaging variation. Just want to have headings there. Fizzy orange and fizzy cola. We have a can. we have a body, and we have jumbo. Then these are the three that we have. Then now I will be calculating the total for all three of them. How much liters of water do we require? How much liters of water do we require? Then please do show all the calculations. I'll be just showing you which figures to take and how to convert the units into equivalent liters of water. For Cola, we are planning to produce 450,000 units. Remember, the 450,000 units, it is the number of units. When I'm saying the number of units, remember this product, we have 330 milliliter and 330 milliliter. That means we counted this individually: 1, 2, 3, another 330, 4, 5, 6, 7, up until we reach to 450,000 units. In other words, the 450,000 units indicate the number of units. It does not indicate the number of liters, and it does not indicate the number of milliliters. So that is why now for each unit we need to say times by 330 and we divide by 1000. In other words, we are now converting the milliliter and the units into equivalent liters. So we have 450,000 units, and that 450,000 units, we say 450,000 units times by 330, because each unit is equal to 330 milliliter. When we say equal, the answer we get, it is the total milliliters of the units that we want to manufacture. So now this is in milliliters, but we want it in liters. Then we divide by the number of milliliters in 1 liter. Then this gives us 148,500 liters. Remember, once again, 450,000 units times by 330, it gives us the number of milliliters. We divide by 1000, then this gives us 148,500 liters that are required to produce the units that we want to produce, which is 450,000 units. Now we continue on that same note to the second product for Fizzy Orange. The second product, we want to produce 320,000 units. Then each unit of that 320,000 times by 450. Remember, 450, it is the required to complete 1 unit. Then this will be in milliliters, because we multiplied the units by the 450 milliliter. Then we divide this by 1000. Then this will give us the number now of liters. The number of liters. That number of liters is 144,000. Then we go to jumbo of the Fizzy Orange, which is 3,450,000. 3,450,000. That is not through 25,000 times by 1.25. Remember, in this case, 1.25 is already in liters. So when you multiply, we get to the number of liters, 31,250. So 31,250 is already in liters, 31,250. Then now we continue to the second product type that we are planning to produce. Second product type that we are planning to produce. Second product that we are planning to produce. It is a total of 180, a total of production 2.1 million or 3.450 million, 3,450,000 times by 330. Remember, it's a can divide by 1000. So this gives us 1,138,500. 1,138,500. 1,138,500. Then we go to the second one. Second one is the number of units that we planning to manufacture for body Fizzy Cola, which is 2.1 million units times by 450 divide by 1000, making sure that everything is in liters. That is 945,000 liters. Then the last, very last one will be 12,200 times by 1.25. That will be 15,250. That will be 15,250. If you wanted, you could have added the 2 for the can, the 2 for the body, and the 2 for jumbo. That will be easier, and just multiply with only one amount, plus 31,250. By doing so, that will give you 46,500, 144,000 plus 945,000. That will give you 1,089,000 liters of water. Then the first one will be 148,500 plus 1,138,500. That will be 1,287,000. 1,287,000. So now these are the total liters for each of the product or packaging variation. Now we need the total of all the liters. Total liters required. Our total liters required, we need to calculate how many liters are required. Now when I said you could have added, if you want, I mean that you could have said 450,000, which is a can, plus 3,450,000, which is a can, because the product variation here, or the packaging variation, is 330 milliliter for all the cans. So you could have said 450,000 plus 3,450,000 equals times by 330. Then when you turn by 330, you get the number of milliliters, but we need it in liters. Then we divide by 1,000 milliliters in 1 liter. That will give you 1,287,000, which is that 1,287,000, the sum of the two. So that will be a very easy shortcut. Then now we need to say plus 1,089,000, adding all the three products, plus 46,500, and this gives us 2,422,500. Remember, these are the liters after the loss. Don't forget that, after 5% loss. Because the minute we get to finish the goods, there was already a 5% loss. The minute we get to finish the goods, our goods have already lost 5% during the process already. So now, because of the loss, when we're calculating the number of liters from the finished goods, that means we get the number of liters after the loss. So now remember, the 2.4 million of the maximum capacity, the 2.4 million of the maximum capacity, it is before the loss. I don't want to compare the after the loss with the after the loss. I want it before the loss, the one that we buy from the supplier. So now let us continue, and we calculate our total requirement. Total liters required before the loss, and that before the loss will be times by 100 divided by 95. Then it will give us 2,550,000 liters. 2,550,000 liters. So now these are the required liters. Let us say how much is available liters. The liters that are available are 2,400,000 liters. The liters that are available are these ones that are available from the supplier. The supplier is supplying us with 2.4 million, which is our maximum capacity. So now that means we need to say minus 2.4 million. When we say deduct 1.4 million, we get 150,000 liters of water, which is a shortage. A shortage is 150,000 liters, because what we require is 2,550,000 liters in order to make sure that we produce according to our planned product variation that appears on our budget. In order for us to manufacture all these units that we plan to manufacture, we need the 2,550,000 liters of water. But what is available is 2,400,000. That means this is a shortage. Therefore, now the conclusion will be we don't have sufficient water to produce the unit that we want to produce. Because they said we need to, comment on whether or not the available prepared water will be sufficient. Then we will say the available water is not sufficient. We are running at a shortage of 150,000 liters. That will be your comment. Then after we go to the second part of the question, where we are now provided with the body only. It says for question B only, assume that the 2019 financial year, the budget required after the loss prepared water for body is 1,089,000. This is the required water. However, only 1,008,000 liters after the loss are available, and both of them are after the loss. We don't have to calculate them before the loss. Everything's already after the loss. So now we are to calculate the budgeted optimum manufacturing mix. Obviously, we can say that there is a shortfall here. The shortfall is 1,089,000, then minus 1,008,000. Then we already know that 81,000 liters of water are a shortfall. So now we need to go through the process of calculating the contribution, doing the ranking after. So let us just go straight and we calculate our contribution. Then let us say required, this is our number B, required is 1,089,000 liters, available is 1,008,000 liters, then 81,000 is a shortfall. The minute we know there's a shortfall, then now we go to our calculation of the contribution. For which product specifically? It is for the body, but we need to do it for all three of them. For all three of them. We need it for all three of them. For the body, for the body, they want it only for the body. It says assume that the 2019 financial year, the budget required after the loss prepared water for the body is 189 million, and after the loss, and also for the body it is 1,008,000, and we are required to calculate MC's SM's 2019 financial year budget optimum manufacturing mix per product type. Very important, per product type. For the body, remember we have two types of product, Fizzy Orange and Fizzy Cola, and Fizzy Orange has a body and Fizzy Cola has a body. So now our information only relates to the body. Let us look at the information from the above. If we do have the costs that are related to the body specifically, the cost related to the body, but now our costs that we have here are for per liter, meaning we have already calculated the cost for the product body. To be specific, we definitely have done the calculation for the body. We're calculating the in-house variable cost per unit of a body. There we are, per unit of a body. That is where we are, the in-house variable cost per unit of a body. And that per unit of a body was for Fizzy Orange for each of the product type, and for Fizzy Cola, which is one of the product types. So now that is where we are. The empty bottle is for the unit, of a body, and also the distribution cost is for the unit of a body. So I'm very happy when we deal with that. So it will be fizzy orange body, fizzy color body. That is our focus. Remember, the selling price were the same. The selling price were the same. It was 8.70 if I still remember. So now we have fizzy orange. Under fizzy orange, we are only looking for one packaging variation body. And under fizzy color, we are looking for one packaging variation, which is body only. Then we have our selling price, and our selling price, I think it was 8.70. Our selling price was 8.70 for the body when we read on the selling price information. 6.80 was for the can, 8.70 was for the body. Then we have put that we had in-house variable manufacturing overhead cost. In-house variable manufacturing cost. Our in-house variable manufacturing cost only for the body. That's our focus. We're looking for the variable cost. Remember, we're doing the contribution. In-house variable manufacturing cost per unit of a body for fizzy orange. There, the fizzy orange in-house variable manufacturing overheads 2.736. 2.736 and 3.15. 2.736 and 3.15. 2.736. It is 2.736 and 3 rand 15 cents. We also did have other variable costs. Remember, we still need to take into account the cost of the prepared water. The prepared water cost per unit. For a can, we're not doing the can. For jumbo, we're not doing jumbo. For bud, yes, 0.45 cents. It was the same for both the product variation because we had a cost of 1 rand per liter. So there is a 45 cents of the prepared water. Prepared water 0.45 cents, and this is a variable cost 0.45 cents. We had a distribution cost which was partly variable, or the empty bottle. Then after distribution cost, empty bottle, it is 8 cents. Empty bottle, it is 8 cents. And remember that 8 cents is applicable to all bottles and 15 cents for the distribution cost. The empty bottle, which is 8 cents. Let me just check, 8 cents or 80 cents? It is 8 cents, yes. Then after we have there 0.8, this is 80 cents. Definitely this is 80 cents. It was 55 and 80 cents. 0.80 cents and 15 cents. Empty bottle. The empty bottle is 8 cents throughout. We have 80 cents and the 15 cents of the distribution cost. Distribution cost, that is variable. Remember, we are only focusing on the variable cost here. 15 cents, 0.15, 0.15. $0.15 and 0.15. Then now we will get to our contribution per unit. There's no other cost that I remember that will be missing. In-house variable cost, negative. Now we have 8.70 cents minus 2.736. 2.736 minus 0.45 minus 0.80 minus 0.15. Then we get to Just repeat that one. 8 rand 70 minus 2.736 minus 0.45 minus 0.80 cents minus 0.15 cents. That gives us 4 rand 564 cents. Second one, 8 rand 70 minus 3 rand 15 cents minus 45 cents minus 80 cents minus 15 cents. That is 4 rand 15 cents. Then we need to divide by the limiting factor per unit. Limiting factor per unit. Our limiting factor per unit is 330 milliliter, and that is 450. That is 450. That is 450. Now that will be per unit. If we need it per liter, if this was per liter, then we'll have to divide by 1000 after 450. Then now let us go straight and we say 4.15 divided by 450. Then this gives us 0.009. Then this one will give us 4.564 divided by 450. Remember, the BAD is 0.10 here, that is 0.09, so the ranking will be number 1 and this will be number 2. This will be contribution per limiting factor. Then we do our ranking. After we're done with our ranking, we allocate now the limited resources accordingly. Allocate the limited resources where we have a shortfall of 81,000 liters. Then we have to say available water, allocation of the available water. We only allocate what is available. We don't allocate what is not available. Available water is 1,008,000. Then we allocate according to the rankings. Allocation to body under phase orange. Body under phase orange. Then we need to say phase orange, how many liters do you need? Phase orange body requires 144,000 liters of water. Remember, this is in liters. Now, because phase orange body is ranked number 1, then that means it must get the first allocation or first priority in terms of allocation. So now we have allocated that 144,000. Then the remainder will be for the other product. Then we say 1,008,000 minus 144,000. That means we have 864,000 liters that are available. These are the liters. Then this is allocated to another body, but under phase collar. Under phase collar, because phase collar was allocated second. Now we need to say how many units to be produced out of these liters. Units produced will be 864,000 liters divided by the 450, divide by 450 as times by, or divide by 0.450, 0.45. Hope you understand why I'm saying 0.45, because this is the number of liters, so we need to divide by the 450 equivalent to liters. 450 milliliters, that is converted to liters will give us 0.45. Why 0.45 is liters? 450 is milliliters. So because 864 is in liters, it must be divided by what is equivalent to liters, not by 450, because 450 is milliliters. So now we do that. If we divide by 450, then we need to multiply after by 1000. So we divide by 864,000 divide by 0.45, then this will give us 1,920,000 units, meaning these are the units that they can produce. Then now the minute we have these units, we then need to calculate our optimum production mix. Optimum production mix, I think that must have been a requirement. Optimum product mix, optimal product mix, or optimal production mix. Production mix or manufacturing mix. Equals, we have fizzy orange, fizzy orange body, then we have fizzy color body. All right, fizzy color body there. The fizzy color orange, we are going to produce the whole of the not 144,000. But the second one will be 1,920,000. Let us look now how many units is fizzy orange body requiring to produce. Fizzy orange body budget in terms of units, it was 320,000. Let us check if that's 320,000, 144,000. Divide by 0.45, it gives us the same 320,000, just doing it in reverse, 320,000 units. Then we multiply this by contribution per unit. Now we were not required to calculate the contribution. In this case, it was just optimum product mix. Let me just verify that. I think the contribution was required under the break-even point. Yes, there was no contribution here, but if there was a contribution, you get the optimum product mix, you multiply it by the contribution 4.564, and you multiply here by 4 rand 15 cents, if I'm not mistaken, in terms of the contributions. Here the contributions you multiply by the contribution from your optimum manufacturing mix, if that is a requirement. Even if it's not, it's just safe to do so. Just get used to that multiplication, then get to your contribution values there at the end. So that was the second requirement. Now we go to the third, which is the second last requirement. This requirement, they say in answering question C, only assume the following 2 points. And these 2 points are the budgetary contributions per unit of fizzy orange, only fizzy orange with all the packaging variation, only fizzy orange with all the 3 packaging variation provided with us the contribution per unit. Then after it says ignore the implication of the opening and closing inventory. Thank you for that. Calculate SM budgetary contribution value at the break-even point for fizzy orange. We already have the contribution. What do we need when it comes to break-even point is the sales mix. Under the limiting factor, which is the optimum production mix, we divide by the limiting factor per unit. Here we multiply by the sales mix when it comes to the break-even point. So now let us calculate our sales mix first. Let us calculate our sales mix. Look at the sales mix. How many units are we budgeting to sell? Remember, this is based on the budgeted information. We look at our budgeted sales. These are the budgeted sales for which product type. For fizzy orange, that is where we are. So now we need the lowest common denominator. We just simplify these numbers. First of all, 36,000 does go to 36,000. That's what you must first do. Check if does the smaller number fits to all the other numbers. If that is the case, then that will be the simplest approach, or else look at the lowest common denominator. That is, let us say 360,000 divided by 36,000. That will give us 10, meaning here we have 10, here we have 1. 36,000 divided by 36,000 will give you 1. 540,000 divided by 36,000, we get 15. That means our sales mix is 15:10:1. Total is 26. So now please do show that sales mix. Please do show that sales mix. Then after the sales mix, we have our contribution for the three products. We have, this is our C, answer for C. We have a can, a body, and a jumbo. We have the contribution already provided to us. It is 3 rand 60, 4 rand 30 cents, and 1 rand 50. Then we have our sales mix. Please show the calculation for the sales mix separately, 10 and 1. Show the calculations separately, then you do the reference, refer to. Very important. Today I'm not showing that. 3.60. We get 54 rand. 10 times by 4 and 30 cents. We get to 43 rand. Then 1 rand 50 times by 1 rand will give us 1 rand 50. And this is contribution after sales mix. Contribution after sales mix. Then we have our total contribution or weighted average contribution. Then this contribution will be 54 plus 43 plus 1.5. This gives us 98 rand 50 cents. Now that means we need to say our break-even point will be equal to total fixed cost. Remember, we are here focusing only to fizzy orange and this product variation. So I'm looking for the fixed cost for the fizzy orange. Fixed cost for the fizzy orange. My total fixed cost for the fizzy orange, there we go. The total is 2,570,000, which was made of 1.7 plus 510,000, fizzy orange 360,000. Fizzy orange, fizzy orange, fizzy orange. So that is where the 2,550,000, 2,570,000 is coming from. 2,570,000, yes. 2,570,000 of the total fixed cost. 2,570,000 divide by 98 rand 50 cents. This will give us break-even point 2,570,000 divided by 98.50. This gives us 26,091.37, which is equivalent to 26,092 units per batch. Now we need these units for each of these three products. For the can, we need for the body, though I want to have space, we need for jumbo. Let me go to the next page. This will cost my calculation. We need for the can we need for the body, and we need for jumbo. Now for the can, it will be 26092 times by 15. You multiply by the sales mix. Remember, our sales mix was 15:10:1. So we multiply by that sales mix, 26092 times by 10. Then we have 26092 times by 1, which will give us the same 26092. Then we need to multiply this by the contribution. Our contribution was 360 and 360, 430 and 150. Just verify that. 360, 430 and 150 cents. So that's where those contributions come from. Then we times here by whatever answer that we get, we times it by 360. 26092 times by 15, it is equal to 391,380 times by 360 equals 26092 times by 10. It gives us 260,920 times by 430 cents. Then we times by 150 cents here. Then we get now to the calculation of the contribution. Times by 430 cents. This is 1,121,956. This one is 3.60 times by 391,380. That will be 1,408,968 contribution at the break-even point for each product. Then after we have 26092 times by 150 cents. That gives us 39,138 contribution for each product variation. Then at the break-even point plus 1,121,956. I think that was 56. Plus 1,408,968. Oh, that was 956 or 950. Then after this will give us 2,570,062. Let me just verify the mid one. 260,920 times by 430. Yes, that was 56. So this will be the total contribution at the break-even point for the fizzy orange product type. Then after we go to the last or second last question, where now we are required to calculate the sales mix variance for fizzy orange jumbo only, but I'll just do all three of them, not only jumbo. Remember, we already have our sales mix, which is 15:10:1. So now what do we need? We need to know actual sales. The minute we are required to calculate the sales mix, we need to know the actual sales. There we do have the actual sales for 2019, 405,000, 2,700, and 18,000. We need their total. We need their total. 405,000 plus 207,500 plus 18,000. That will be 630,500. This must be allocated in the ratio of 15:10:1. That is what this must happen. We call that a standard sales mix. 15:10:1. Then we know that our total ratio of 15 plus 10 plus 1 gives us 26. The total ratio is 26. So now we are to calculate our standard sales for each of the packaging variation under the product type called fizzy orange. Then we are doing our sales mix variance. I don't deal with formulas most of the time. but I will just show you and tell you what the formula says. Then we have jumbo. Remember, we're only doing one, but I'll just be doing all three of them. We have standard price or standard, we have standard sales units, standard sales units, or standard sales mix if you want to do so. Standard sales mix, how much was supposed to be mixed in terms of standard. Our standard information is telling that for every 15 units of a can, 10 units of body and 1 unit of jumbo. That's what this means. For every 15 units we sell, or we sell 15 units of a can, 10 units of a body and 1 unit of jumbo. That is our standard product sales. So now that is our sales mix. We should be selling at this level. Now let us say now we are doing the allocation. Remember, our actual sales are 630,500. So now we are calculating the standard sales mix, which is from the actual sales based on the standard mix. Our standard mix is 15:10:1. Then we say 15/26 equals times by 630,500. That is how you calculate your standard sales. Then that means our standard sales amounts to the 336,000. But our actual sales are how much? Our actual sales are 405,000. Preferably start with the actual, but I prefer to start with the standard through all the variants. But when it comes to sales, start with the actual. Actual minus standard, which is 363,750. Then we multiply this by the standard contribution, 303 rand 60 cents. Then our actual here was how much? Our actual was 207,500. 207,500. 207,500 minus standard, which is 10/26 times by 630,500. That will be 242,500 times by the standard contribution of 430 cents. Then we look for the actual sales. Again, actual sales were 18,000. Then we say that is actual sales of 18,000 minus standard sales mix. Our standard for the third product is 1/26 times by 630,500, meaning 1/26 out of the units sold was supposed to be made to the jumbo product under Fizzy Orange, 24,250. Then we times this by 1 rand 50 cents. 1 rand 50 cents. Then we say 405,000 minus 363,750 equals times by 3 rand 60 cents. We get 148,500 favorable variance. Second one, it is 207,500 minus 242,500 times by 430 cents. This gives us 150,000 unfavorable, 150,500, that is adverse. Then we go to the third one, which is the jumbo. The jumbo one, it is 18,000 that was actually sold, but we're supposed to have sold 24,250. So we sold less than our standard mix, Tampa 1.5, then the 9,000 then becomes unfavorable. The 9,375 is adverse. Standard is what was supposed to be sold. Standard, what was supposed to be sold. 405 is what actually took place. Now, if you sold more than what you supposed, that is good. If you sold less than what was supposed, that is bad. So now, hence, the variance, others are favorable, others are unfavorable. Now we go into the very last lovely question on the proposal. to implement the economic order quantity. The proposal to implement the economic order quantity. In 15 minutes, I shall be done. SM proposes the use of the EOQ technique to manage all its sugar requirements. Currently, sugar is purchased. Take note, we are talking about the sugar here. Yet we produce the drinks that are in liters, but each liter requires a sugar. Currently, sugar is purchased from one supplier only, which is Mohammed Sugar Milling. Mohammed Sugar Milling, which is MSL, sells the sugar only in quantities of 50 kilograms, packaged into one fabric sack. So this is a 50 kg fabric sack of a sugar. For this proposal, the budgeted cost of placing one order is expected to be $375. Take note that the ordering cost of $375 is not per kg, it's not per liter, it's just period $375 ordering cost. For 2020 financial year, MS quoted a sugar purchase price at R12.60 per kg. The purchase price is R12.60. But the ordering cost, the cost to place an order is not per unit or per whatsoever, it's just the ordering cost. SM expects to incur holding cost. Excluding the required return on investment, remember that the required return on investment 10.5% that I said must be multiplied from the price. It is R2.50. Holding cost is R2.50 of a sugar per annum, and this is per kg. Take note, this is per kg. This is also per kg. Now that means when we look at our EOQ, which is 2 times U times by O, that means the U being the annual demand. This is the annual demand. The annual demand must be in kgs of sugar, because the holding cost of R2.50 is also per kg, plus the price which is R12.60 is per kg. So now the annual demand must be per kg of sugar. That means we need to convert our liters into equivalent kg, or we need to calculate how many required kgs of sugar per liter of a drink. Now, with that being said, there was some analysis at the beginning. In the beginning, I told you how many kgs of sugar are required to complete 1 unit, 1 liter in fact. That was the required sugar per liter. The required sugar per liter was how much for fizzy orange or for fizzy cola? Let us look at the question. Which one are they talking about? Which one are they referring to in the question? Okay, in this proposal, they don't tell us which product variation are we looking for this EOQ sugar for. Let's go to the requirements then to get all the details. It says that assume that the proposal to implement EOQ is accepted. Calculate the number of fabric sacks per order, which Mohammed SM will need and use to package the supply of SM budgeted sugar requirements for all the budgeted manufacturing units for the fizzy orange product type. For the fizzy orange product type. So we are looking for the sugar only for the fizzy orange product type. So we are focusing on the fizzy orange product type. That means this is where we are. Fizzy orange, or fizzy cola. Yeah, I have fizzy orange in my mind. Sorry for that. Fizzy cola product type. Fizzy cola product type. So now we are under the fizzy cola. Required sugar or sugar requirement per liter. Fizzy cola, we need 0.20 kgs per liter. Or we require 0.20 kgs per liter. Meaning we need to take all the units of fizzy cola for the can, for the body, and for jumbo. We convert them into liters. Then the minute you convert them into liters, we can multiply by the sugar requirements per liter. Remember, where did we get the sugar requirement per liter? The sugar requirement per liter was from the information that was provided. We provided here with the information, standard information per liter. This was per liter. So this was per liter. So now we said 2 rand 40 cents divided by 12 rand. It gave us 0.20 kgs per liter because the information was per liter. So now we know how much sugar is required per liter. Now that we know how much sugar is required per liter, we need to know how many liters of a can are we planning to produce. How many liters of a body in liters are we planning to produce? How many liters of jumbo are we planning to use in order for us to get to the unit that we want to produce? So now we want the units in liters. Now let us go to the plan for 2020. The budget for 2020. Here is the manufacturing budget and standard for the year 2020. This is the budgeted information for 2020. Now that we know that we are not doing the orange. Orange is gone. We are focusing on the physical. Now we need to convert this number of units into liters, which we know that we multiply the units by 330. It will give us the total milliliters. Then we say we're not looking for milliliters, we're looking for liters. We need to convert this, divide this by 1000. Then after we do the same thing here, we say times by 450 divide by 1000. Or else if we want, we can just simplify it and convert the 330 milliliter. Remember, 330 milliliter is divided by 1000. When we divide this by 1000, it will be 330 divided by 1000. 330 divided by 1000. This will give us 0.33 liters or per liter. So now this is already converted into liters. And also the second one, that 450 divided by 1000, it will be already converted into 0.45 liters, which is the jumbo now. Remember, which is the body. The jumbo is already 1.25 liters. So when all these are in liters, we don't have to worry. We multiply our units by 0.33, multiply our units by 0.45, multiply our units by 1.25. Whatever we get will be in liters because these are already in liters. But if we multiply by 330, we need to divide by 1000 because 330 is milliliters. So now let us calculate now our units in liters. Calculate required liters. Now we are calculating required liters. For each packaging variation, we have the can 3,400,000 times by 0.33 times 3.4 million. This gives us 1,122,000. Then we have the body. Let us look at the units that we are planning to produce. It is 2.2 million, 3.4 million we done, 2.2 million, next one is 10,000. 2,200,000 times by 0.45 liter, 0.45 liter, that will confuse 0.30, 0.45. That will be 2,200,000 times 0.45. This is 990,000 liters. Then we have the jumbo. We need to know how many liters of jumbo are required. 10,000 times by 1.25. 1.25, remember, is already in liters. 1.25 times by 10,000. This is 12,500 liters. So now our information is uniform, all in liters, plus 990,000 plus 1,122,000, 1,122,000, it gives us 2,124,500 liters. 2,124,500 liters. This is the total required liters, or total needed liters. Then we need to calculate sugar requirement or sugar needed. How much sugar do we need? Now remember, this is in liters, and we have 2,124,500 liters. How many kgs of sugar are required for each liter? How many kgs of sugar are required for each liter? Then the kgs of sugar that are required for each liter, it is 0.2 kgs. 0.2 kgs of sugar that are needed. Times by 0.2 every liter, meaning 424,900 kgs is what we need. So now this is the annual demand in kgs of sugar. Then the minute we have this annual demand in kgs of sugar, I want to stop here with this approach, then I can look at the second approach. Then we can say our AOQ is equal to square root. My calculator requires me to open brackets, but please, there's no opening of brackets in the formula. But my calculator requires me to open brackets. It is 2 times by annual demand, which is 424,900, times by cost to place an order 375. Then after we divide all of this by the holding cost, and our holding cost being 2 rand 60 cents, holding cost 2 rand 50 cents, plus, let us just verify that holding cost. The holding cost expects to incur holding cost of 2 rand 50 cents, excluding the required rate of return on investment. There we have the purchase price 12 rand 60 cents. Purchase price, remember, this is price times by interest, so that will be 12 rand 60 times by 10.5%. Then we close the brackets twice, closing the second brackets and the first brackets. But let me just erase the closing because our calculators are different. Let me erase the brackets, but I'll still leave the one that are necessary. These ones are necessary. Now, it is very important to note that this is in kgs. These are kgs. That is good. And this is kg, this is kg. Now, if we take this approach, then it is very, very, very easy. You just do all your calculation. Let us say equal. I just want to make it simple. Times by 2 times 3, 75. This becomes 3,118. 675,000. We divide here. We say 12.60 times by 1.0 times 0.105. That will be plus 250. That will be 3.823. Now this calculator does not have the square root unless I know less. Then after you have done your calculation, after you have done your calculation, depending to which calculator you are using. Some of the calculator will give you 9130 point something. Then after you have divided by 50 kgs that the sugar is sold for, it will still give you 183 units per order. That will still give you 183. But others here will give you 9133, not 9130. It will depend on your calculator. So don't be bothered, because the final answer will end up being the same as 183 at the end of the day. Now, I'll just go with the one that will be more straight, the one that I use. It gives me 9130 point, then it continues. Now, these are the number of kgs. These are the number of kgs. Even if you get the 91.33.607, these are the number of kgs. Now, when you round off, it will be 9134. Then this will be the number of kgs. Remember, the sugar is sold in 50 kgs of a fabric sack. So now, since it is sold in 50 kgs, then we need to say how many 50 kgs are going to be ordered. How many 50 kgs out of this 9134? Then we divide by 50 kg per fabric sack. This will give us 182. It will give us 182.68. 182.68. Then rounded off 283 units per order. Meaning it will be 183 units, meaning 183 units of a 50 kg of a fabric sack per order. So now that will be the final answer that you get. Now, the other side of this question is to convert these kgs into the number of 50 kgs of a fabric sack. Now, if you do that, you'll divide this by 50 kgs. Then that means our annual demand will be in number of 50 kgs of a fabric sack of a sugar. So now, if that is the case, we'll say 24,900 divided by 50. Now, this will be 8,498. The 4,498 now will already be per 50 kg, or the number of 50 kgs or sugar sacks. So this will be already in sugar sacks. Sugar sacks in this case. I hope I'm pronouncing it right. Now, if this is already in a sack of 50 kg, therefore now that becomes your annual demand. Therefore now your annual demand here will change. When your annual demand changes here to 8,000, when it changes here to 8,498, that means the 2 rand 50 is per kg, it's not per 50 kg. So now you need to multiply here by 50 kg so that your holding cost is per 50 kg, because these are the number of 50 kgs. The annual demand is in number of 50 kgs. Then again, your purchase price must be converted to be per 50 kg. So you multiply by 50, but at the end of the day, you'll get to the same numbers. But you need to make sure that since this is per in 50 kg sack of sugar, then the price, the holding cost must be in 50 kg multiplied by 50 kg, then the purchase price must be per 50 kg. So just multiply by those, and then obviously those will be brackets, then you go with your calculations. That is another alternative that you can use in your calculation. And now if you use this approach, remember you'll get straight to the final answer. I want to bring that attention. If you multiply by 50 and by 50 here and use this 8,498 per sugar sack of 50 gram, your answer will go straight to 182 point something. It will go straight 182.6 something, which will convert 1.83. So this part will disappear because we have skipped that one already. Now with all of that, meaning your calculations is already after you have divided. What you get will be already after you have taken into account in this 50, which you divided it there and applied in there and applied in there to be equivalent to a price of a 50 kg and a cost of a 50 kg. With those words, guys, you've been wonderful audience. Thank you very much. Don't forget to subscribe to my channel. I hope you have enjoyed this one also. Let's meet on the second one. As I said to you, as time goes by, I'll check this other part of the question, this special order, where a decision must be taken in the special order. You look at the incremental cost, is it relevant or it's not relevant, then take all the total, then after I'll take the decision. This is just the relevant cost decision that you must make. Let me just read what they say. They say, upon your inquiry as SM Chief Financial Officer, Mr. Mac Brown said that this to you. My leader, I hope your phone is not taped. Between me and you, the FSSN has officially approved the bid tender. This is the tender for 650,000. I know you will work your magic on the numbers. We don't work magic on numbers in costing. Numbers just are numbers. There's no magic. On the numbers of SM tender, way below the 650,000. So, hey, there's some scale happening here. After batching this one, me and you will definitely get out smaller Nyana share of the facilitations. There is some non-financial measure that need to be taken into account in here. It's very, very unethical what this dude is doing here. Now it says, as a CA South Africa, identify 4 ethical dimensions. Then obviously we can already see the 4 unethical. There's so many things that are so unethical even on this statement, but there's still more information above. You just identify the unethical aspect from the article provided. Not much to say on that. Is very, very clear. That could potentially threaten your professional integrity, and auditors will know a lot about professional integrity. From the quantitative perspective, advise SM if it should tender for this deal request or not. Then that's why now we look at the tender information. What does this tender do? Are we going to incur more cost or no cost? Is there going to be extra employees that we're going to employ or not? Then we take the decision. But I will record this one separately so that I have all the details and I explained in details without the term being a limiting factor as we speak. With those words, guys, thank you for it very much. Be wonderful and be good as usual. Go and pass the subject as easy as it is. Thank you.